brand new equity peaks in the portfolio. Stock Index 26. We're looking at the Stock Index Portfolio 26 E-mini, trading 26 strategies. Yesterday on the sell-off, we hit brand new equity peaks in the portfolio. 26,205 per E-mini are the hypothetical results. We're trading 4 micros, which is 40% of this number in the 200K portfolio, and 10% of this number in the 50K portfolio. I want to show you the results again in the TradeStation platform after I also show you the commodity report. So stock index and commodity portfolio is up 21K. That is the 26 stock index portfolio 26 plus our commodity strategies. The commodity strategies are down 5K this month, and so you can see if you look here, 26K on the stock indexes, and then the commodity portfolio is the stock index portfolio plus 17 commodity strategies. So the commodities are down on the month so far. It does have a combined, the max drawdown is lower at 29K versus 30K. And so I'm excited about the upcoming week. Watching and tracking cycles, we see that this time last month, we looked at this cycle before from the 19th through the 3rd. This portfolio was up 98K per E-mini. Huge gains. We are right here in the cycle. We didn't get this yet, but we are right here. We are right here actually. We have 3 trading days left. So from 3 trading days left in July, which was the 27th, through the first 3 trading days of August, there were gains of 58K per E-mini, hypothetically speaking. We were out with COVID, so we didn't capture these gains. We stopped trading on the 13th, struggled with COVID, and sometimes you just don't make the best decisions when you're not thinking clearly. So a trading pause, and so our live trading, we did not take those trades, and so we got back in on August the 9th. And started trading from August the 9th through yesterday at equity peaks, up 12K per E-mini. And taking a look at live results, the live results from this time period are slightly smaller, or they're smaller because, and I'm going to show you why here in a minute. It has to do with micros versus minis. But I'm looking forward to this cycle, the last 3 trading days of July through the first 3 trading days of August. And we have also not been on a tear, I guess, this month. Our profits are, 26K versus July, May, April, March, February, January. And this is a portfolio that we've adjusted and implemented. We're dialing it in. And you see in June was a month that had very small profits. And then July, this had nice profits, and then we are sitting here looking to get back in sync, looking to capture the trades and these run-ups. They can happen in a very short period of time. So for a long period of time, it can feel like not much is going on. From August the 4th through August the 26th, you're only seeing $6,900. And so this feels like a long time. You're sitting here, you're watching this, and you say, wow, nice gains in a very short period of time. And then in a longer period of time, you have much less profits. And so the cycles, they happen in short periods of time, and you have to be patient and work your way through those. So there's no guarantee that we'll get on this run. It could chop around, and we could lose the last few days. It could be a net loss the last few days of August and the beginning few days of September. We're talking trading days, not calendar days here. And so we are... it is time for a cycle in our favor. So we are managing our risk, though, and we started out, and we are up on the month and up on the quarter in live trading. Let's take a look at the charts. You can see the movement yesterday in the Nasdaq, sharp move down. This little violent move at the open right here that you see, you can see in this 1-minute chart. This, I think we should have made more profit on a day like this, down over 500 points. Almost 600 points. You see this move here and then this move here. That really threw us off, and we had some losses here at the beginning of the day and then caught up at the end of the day. And one of the reasons that we are performing less profitably than we did than the hypotheticals is the micros. One of the biggest issues with the micros, we had huge slippage right here on Thursday night. 30 points of slippage on this, and then if you come back here to this trade right here was a huge setback because the micros traded 55 points lower than the E-minis on this trade. So the micros were stopped out. It had a losing trade of about 1,500 per E-mini instead of a 1,400 per E-mini instead of a gain of 1,500 per E-mini. If you look at the E-minis, this is a profit target because it doesn't trade down here, and so that's a $3,000 differential. And then after this trade, then we took this trade, which is the loser. That turned off the monthly stop loss. And so on the E-minis, it did not turn off the monthly stop loss. So it proceeded to take these trades right here, while we did not take these trades on the micro. So we missed this winning streak in the micros, and these were gained on the E-minis because the monthly stop loss is set at 7,000 per E-mini and 700 per micro in this setup. And this trade that was a loser in the micros, which cost us, it also cost us because it turned off the strategy signals for the month. And then we went back to our drawdown and trading. I turned this back on. I turned off the monthly stop loss so we could sync up with the E-minis. And so we've been trading it, and it's had some profit since then. But missing those trades based on the monthly stop loss, and then this is the CPI news. The CPI news. I don't remember the last time I still need to go back and take a look at that. The last time the micros traded 55 points below the E-minis. So that was a huge setback. And that is why we are underperforming almost half the results that we should, because we missed some really good trades and we had a losing trade when we should have had a winning trade. And we're scaling this versus the E-minis because the micros, they don't the data for those are the last few years, and we've been the data for the Nasdaq goes back all the way to 2001, and so those are the results and what we show here. So it's very affirming to have these equity peaks, and we're just looking to get back in sync. We had COVID in July, missed this. We transitioned to this portfolio. It's doing well, but we want to get on one of these big runs where that's similar to these previous months, and we're up on the month and at equity peaks now. And so looking to peg the equity peaks. We go through cycles, and sometimes after you've gone through drawdown and it hits an equity peak, you're tempted to stop, and it's possible that it could be the right thing to do to stop. It might draw back down, but oftentimes you see it just pegs away at these equity peaks. It's solid blue up there, it pegs away. And so while we've gone through the drawdown cycle down here, it hits the equity peak and you're like, I'm at equity peaks, I want to get out and wait for another drawdown. And maybe that's what will happen, but you oftentimes have these drawdown cycles, and then you're at equity peaks and you just want to stop, and then you miss the run up. You miss the run up. And so that effectively is what happened in July with COVID. When I was sat out because of COVID, we went through the drawdown, we had a small gain, we were about break even, had COVID, got out, boom, missed the huge run. And so you want to manage risk, but you also want to be there for the big runs. And so after you've gone through drawdowns, you want to be there, position yourself for the run-ups as well. So we are starting to get some nice moves in this market. Thursday and Friday, the market really rallied into the close, and yesterday it went down into the close as well. So the movements are there. It's been a summer of chop mostly, and so we will. I'm looking forward to the trades of the last few days of August and the first few days of September, and those are what I wanted to share with you this morning. Saturday morning research on equity peaks in the stock index portfolio, as well as the stock index and commodity portfolio. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.